Traders, to you live with another episode of Crypto and Clown World live in the Alpha Trading Discord. Wonderful cryptocurrency and traditional markets. So what's going on? Well, if you're not trading low time volatility, you're probably panicking and freaking out. And oh my God, the world's ending. COVID didn't kill everybody, but the markets are gonna. It's probably what's happening right now. Look, when you trade low time volatility, none of that crap matters. This is the kind of shit we live for. Volatility. We don't care which way the markets go. As long-term holders, we care about our investments, right? Everybody, to some sort, probably holds some long-term Bitcoin or other cryptocurrencies. Look, if you're a long-term holder, price doesn't matter. This is where people get off. This is why people buy tops and sell bottoms. If you're a long-term holder, you're holding long-term, right? For a reason. Maybe it's for generational wealth. It's for your kids. Close your portfolio, look at it in 5 to 10 years, and probably put a smile on your face, because by that time, cryptocurrency is going to be off the charts, right? But as we slip farther and farther into a totalitarian world government, apparently, who knows where everything's leading. One more reason to trade low time volatility. But I like a lot. Hold long term, certain things. And, yeah, I'm not worried about it at all. Never have been. Let's take a look here. Hell, that was a 4 hour. Boom. Look at this beautiful 15-minute. Got a couple outliers on the top side, downside, top side, downside, downside. 1, 2, 3, 4, 5, 6. 6 good trades on the 15-minute chart. Let's see if we're building any div. Let's go to a daily real quick. All right. This Bitcoin has been pulling back a bit. We're definitely building some bull div between returns and price action. On the returns oscillator, the one good thing is that the divergence on the daily, on the DLP, was not very strong. There was a little bit of bear div. Let's take a peek here. Yeah, you can see price action here. Barely a higher high on that data set right there. Right? And you had a, here's the thing though, and this is what I was kind of trying to show MJ, where if you want to go all the way back to here, that's where the last actual peak on the returns oscillator was. Definitely some bear div. And I would look for those first couple candles for that to play out. And it dropped significantly, thousands of dollars. But if you go to the top right here, no div. It's coming from way back here. So that being said, and because it wasn't very significant on the DLP, we're going to have to see here. But the markets are correlated, right? And SPY and NASDAQ, obviously, they're having a little bit of a struggle. We're going to go over on to, let's pop over here real quick. Let's check this out. Let me set this up. Get these projections correct since we did have a new weekly. You guys will have to just bear with me, right? Everybody knows I'm not actively trading right now. Got a lot of stuff going on with my move. Yeah, here we go again, right? I mean, these 2 weeks right here where we pulled up from that 33K, 33.1 low. What happened? Look, Bitcoin had trouble getting above the mean of the projection from the 41K low. Bottom line. Apparently now this week, right, we opened up. This is kind of what I didn't want to see. I didn't want to see last week close, but right, on Sunday, we had that dump, dropped it back down. This is the bears pushing. So did the bulls mean business? Apparently not. Not so far. So here we are, back below the 68.3 from that projection. Now, our first standard deviation normal distribution on this weekly candle, 35,200 approximately. Second standard deviation, 32,344. Get back, dog. And third standard deviation, about 29.7. Let's see here. We are below it already. Yeah, we are. The 68.3 Laplace distribution range to the downside was at 37,637. We dropped down here just recently below that. You can see it on the VRE, right? We were above it up here. Right? Boom. Drop down below our standard deviation on today's candle. Bitcoin's trying to pump up now. This last 4-hour candle of the day, Bitcoin literally just dropped down, tested the second standard deviation, normal distribution, bounced from there. Now it's back up at the daily S1. Usually those support levels for the daily price action volatility range will flip the resistance. You see, boom, it immediately resisted from there. I would like to see Bitcoin close the day back up inside this daily range. But here we go again, right, ladies and gentlemen? We got the weekly range above the monthly. Now look what's going on. This is, I mean, if the bulls push here, probably not going to be a problem. Because we do have the center of the new weekly right here at about 39.8. It is still above the monthly. Here's the monthly at about 38.8. Or no, sorry. That is the center of the monthlies at 39.8. Center of the weekly is at 40.4. It behooves these Bitcoin bulls to get this thing back up in this weekly price action volatility range. Look, when we opened up the new week, rejection off the bottom side of the weekly. Rejection off the bottom side of the weekly. Rejection off the bottom side of the weekly. Dumped out to the first standard deviation. Pumped right back up. Rejection off the bottom side of the weekly price action volatility range. You see how this is setting up? The bears are defending this area now big time. The bears did what they needed to do. They pushed it back down. We are literally below the monthly price action volatility range right now. Could get ugly. I told everybody going into last week, maybe 33.1 wasn't the low. Maybe they try to push this down even farther. The bottom line, what do algos do? They love to take people's money, specifically retail traders, trading traditional technical analysis. That's what they do. They do it well, too. So that's a little play-by-play on the VRE. Everybody that has it, knows how powerful it is. You can see we ranged today in between the bottom side of the weekly and the first standard deviation on the daily. What's this at? 38.8 area. Let's see. I mean, that's asking for a lot, especially apparently there's a lot of sell pressure. I'll take a peek at that in a second. It's going to look good, right? I showed that last week. But if these bulls can pick this thing up, close it back up in this daily price action volatility range, might not be a bad thing. Let's see here. I already told you, because first standard deviation of the top side, 41.684. 41.684. Let me do a quick flip on this. So you can see from the all-time high, right? We dropped down the 95.4 Laplace distribution on this projection. We had a couple of wicks below, right? We closed this weekly. This is the weekly that we actually dumped down below it. The bulls pushed it right back up into that range. Now look where we're at. Once again, we're parked right down here at the 95.4, almost there. It's at about 36.7. Yeah, about 36.7. So still above first standard deviation, normal distribution. It's actually in a pretty good place there. Maybe we get a wick down to 35.2 and bounce it back up. This is an important week. Very important week this week, for sure. See what's going to happen with this price action. No doubt about it. Let's, since we're here, let's take a quick peek. 39.9, yeah. Above the monthly, a little bit below the daily. I mean, here's something to look at too. The CMEs. Here's the daily, right? Here's the daily price action volatility range. Hasn't even been close to being tested yet. So Bitcoin, what are we doing here? have a little run to the downside first. Okay, here's CME. Here's a Laplace distribution projection from the CMEs. Look at this squirrel. CMEs look a little better, right? On the futures, Bitcoin is hanging right there at the 95.4. CMEs, I mean, now is that a good thing or a bad thing? Ah, boy, 33K. 33K is what we're looking at. Yeah, futures is open. Got everybody squirreling. Bilbo's supposed to know what the hell's going on. Well, apparently not this week. This is what happens when I'm not actively trading, right? Not staring at the charts 24/7. Yeah, so if CMEs is barely hanging on here, or I mean if futures are barely hanging on in the 95.4, we're going to want to see a bounce there. Let's say 36.8. 36.8 is the first standard deviation on this new weekly candle. That's going to be important to watch. If CMEs breaks that, you're probably going to see the futures break to the downside of the projection, the 95.4 plus. That's what I'm seeing there. And obviously, right, the ultimate power means everything's flipped back. It's flipped back. Did that cloud cross back down on the 12 hour? Boy, that's ugly. It's heading there. But here we go, right? It took a lot, right? It doesn't look like it because we shot this 12-hour candle right through reverse wave trend, continued right through the reverse Fisher, and the bears have now pushed price action right down below both of them again. I'll tell you what, the bulls have some work cut out for them again. Was this a little bull trap up here? Could have been for sure. That's why we trade low time frame volatility. I'm still going to talk about macro stuff like I always do. And the charts were set up for the bulls to take advantage, right? Right here. Right here. The bears are just not having it, right? And inflation is good for Bitcoin. Supposedly. Right? Supposedly. I don't know. We're going to have to see how these traditional markets open up. Because it's, let's see what happens with Bitcoin overnight. That's what we're going to have to really pay attention to. Because if you see Bitcoin start to dip down, yeah, what the hell. Guys, I sure the hell hope that I wasn't sleep trading. Because my watch list is screwed up. Bitstamp index. That's what I want. You can see right here, the CMEs are about way up here. The futures on, at least this is the dollar index, they were about the same though, down here by the 95.4 Laplace. We could be making a run for this 35.3 area, right? 35.2 area per standard deviation. If we do that and we get a wick down here, you are going to want to see this pull back up. Because if we close a weekly candle below this, it's not going to be good. Look at the 99.7, 16,350. Get a chance to buy Bitcoin that low again. Wow. What an absolute charm. Yeah, for sure. For sure, Sayron. Yeah, you got to take your profit. But there's always those people out there just want to sit in trades. Big time. They get wrecked. They do get wrecked. Let's see if anything's sticking out over here. Okay. Now, like I said at the beginning, the daily. Look at the higher lows on the return oscillator. Look at the lower lows on price action. Volatility percentile is contracting, positively correlated. Z-score historical volatility is flat, right on the zero threshold, positively correlated, right? Oh, so down. Look at the correlation for the entropy going into trend on the daily. It's correlated to the downside. Significantly negatively correlated on Shannon entropy percentile expansion. So what does this entire signature tell me on the right side? The price action's going down. The that's what's happening, right? People are like, well, that's stupid, of course. If your indicators say it's going down, these indicators don't lag, though, right? These indicators don't lag. While everybody's trying to figure out a direction, our indicators are going to give you a little hint, especially when you drop down through the time frames. Trading that 15-minute chart, and you're looking for those outliers. There's been outliers to the top and to the bottom. It's beautiful, beautiful trading. Go down here on the 15-minute. Look at these outliers, especially today, right? Especially today. 12-hour returns oscillator, especially, here we go, 12-hour returns oscillator is definitely above the zero mean. We've already got one nice stab, bull div here, trying to set up another and a bounce off that zero mean. The log return Z-score got below the 99% confidence interval with an outlier. This is usually good. Usually when this happens, when you get these outliers, you're going to at some point work your way down to the downside. This is a great indicator when you realize that. At least you can see this whole time, right? The returns oscillator back here was going up. Didn't have an explosion in price, but when you see that rejection off the 90%, whoop, at the same time, you're getting an outlier to the downside. Beautiful. Beautiful trades. Hello, Andy. Yeah. Andy's enjoying his vacation. Good for him. Let's check out this 2-day. 2 days having an outlier to the downside. As, yes, there was definitely some bear div on the 2-day. Actually, not a lot. Boy, weak if anything. Weak if anything, but the returns oscillator. Even though it was weak, look at the rejection off the zero mean, and then we get this last 3 2-day candle dump. And the 2-day negatively correlated Shannon entropy percentile expansion. Correlation for the entropy itself. Starting to drop into trend, right? To the downside. Negatively correlated historical volatility Z-score heading up. Expansion on the volatility, negatively correlated. Oh, Bitcoin. These poor traditional TA traders out there. And if you're in a short, right, take your profit. But they don't know where to take their profit, so they sit in trades, and all of a sudden BTC pops $1,000. They've been getting over leverage the whole time, and they get liquidated. That's the problem with using leverage. It'll get you wrecked. Don't think it won't. Let me get on the index. And the last rejection on the 2-day before we got that outlier on the variance. Look where we were rejecting from. Right? The 33. But that's actually 33 right now is crossing down the 99. We rejected off right where the 99 and the 33 started to come together. Oh boy, guys. On the 2-day, the 33 has managed to stay above the 99. We got the 9 and the 33 at this 2-day close, which is happening tomorrow. That could be real ugly for Bitcoin, but don't think it can't go back up and test this area. That's why, man, people are gonna get so wrecked. Bitcoin's on a mission to wreck everybody. And that's what it does, right? Leaves fresh bodies in its path. Non-stop. Let me look at the VRE. Yeah, for sure. Not as tight as it was over the weekend, right? We had a real tight day, and then it dumped out. Remember? Look at Sunday. Or was that Saturday? Yeah, it was Saturday. All right, super tight. Boom. Oh, I'm on CMEs. My goodness. Get back on. Oops. But I know it was tight there. Boom. So here, yeah, it was Sunday. So Sunday, super tight range. Open up the new day. Bounced off the bottom side of the 68.3. Didn't quite make it back up to the daily range. Super tight, telling you it was going to be a trending day. Where did it trend? Within a few hours, it trended. More than a few, right? Probably about 4 hours, 4.5 hours. Dropped right to the 95.4 Laplace distribution range. Look at all the candle closes, and the wicks tried to get below it. Bounced right off of it. That's why these distribution levels are so powerful. People don't understand the distribution. All you got to do is look. Yesterday, right? That's where price action got stifled. There was a 95.4% chance BTC's data set was going to close the day inside there. See the blue cross line right there underneath the green? That's the first standard deviation normal distribution. There was a 68.3% chance BTC's data set would close up inside there. It literally tried, but right before the daily close, it dropped out. But then, what a fake out. You know how many people are getting wrecked in these moves? Look at this. Boom, 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 wham. Boom, 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 wham, wham. Look at this volatility. So our YouTube Jimmy's out there going, don't you dare trade those low time frames. Volatility traders are like, please, God, give me volatility. This is what we feed on. And it shows in the charts. It's a beautiful thing. So, but still, yeah, semi-tight range. I mean, that is probably 1.1%, pretty tight. Obviously, if you really want to see a trending day, something like that, you know you're going to get it. Did today trend? Yeah, obviously. Both ways, though. This price action was a lot more price action than we had then. I mean, this is just one move. Got a little pump to the top side there. This is a lot more volatility. So where will BTC close today? Obviously, the bulls are trying, right? First standard deviation. They're trying to close this daily candle up inside the 1SD on the daily. There's also a 68.3% chance it closes above like 38.2 up inside the Laplace distribution. Back over here and check. So yeah, man, oh man, this 2 day is ugly. Or 3 day. That's a 3 day reject right off there. There was the 2 day. Yeah, I mean, couldn't get up. Couldn't get up above that reverse wave trend. These higher time frames. Let this weekly end up looking. Let's see here. Oh boy. Yeah. During this whole run on the weekly, here's the 9 length variance log moving average. It never crossed down the 33. It has now. And that 9's getting ready to cross the reverse wave trend. 33's turned down. Here's the 99 down here. We already tested the reverse fixture on the weekly right here. Are we going back down there? To 34.4. 34.4. Kind of right in between the first standard deviation normal distribution and the 95.4 Laplace. About right in the middle of them. Very interesting. Yeah, good. Oh boy. This is going to be important here on the weekly. Are we going to start some new higher lows here? Right? Or is this thing going to break down? Because I'll tell you what, if we close a weekly candle below this reverse fissure, there's a very high probability this thing is just a bottom's going to fall out of it. You got everybody scared shitless out there about the markets. So, who knows? Who really knows? One more reason to trade low time frame volatility. But on a weekly, the Shannon entropy percentile is contracting, heading into negative correlation. Historical volatility z-score. The correlation is sloping negative, heading down. Here you can see on the volatility, let's blow this up. Yeah, we're significantly positively correlated, contracting. We all know what that means. Price coming down. Volatility doesn't lie. It's amazing we got this. Whoop, we got that pop there. It literally, those 2 weeks, the volatility, it was still expanding, positively correlated. That's what you got to love about this low length volatility. It definitely called it out. It is starting to, it's starting to slope down though, but you got to look at significantly correlated. This is definitely a time to get rid of every time frame above a 4 hour. Go into your intraday trading. Get a beat on what is happening on the 4 hour. What's the 4 hour telling you? Where is your capital going to be best allocated? Is it going to be to the downside or to the upside? To be honest, right now, look at the choppy 4 hour though. Right, we had this nice little slow move to the upside, then a dump. Boom, almost a candle backfill. People got wrecked here. And now 2 4 hour candles right back down. Rejecting off the 9 length variance log moving average the whole time. We're back up. You guys usually know what happens when you start doing this. Right? You get a nice dump. Have we already had it? Possibly. The bulls better wake up though. I'll tell you what. We all know when those bears get on the honey, they get stoned. Get that honey buzz going, and oh my. So anyway, yeah, shit can all the high time frames, intraday trade, get a good idea of what the 4 hour trend is telling you, and then just drop down through the 90, the 45, the 15, the 5 minute. Trade with the trend. When you trade with the trend, you can expose yourself. It's a lot easier to expose yourself, but at the same time, you got to take your profit at those price action volatility ranges. Whether they be support levels or resistance levels, weekly or monthly levels, in the distribution. You don't have to be in the whole move. This is what locks it in for volatility traders. This is what people need to realize. This is why when you learn how to volatility trade, you become a winner. It builds confidence. Because you know when you get an outlier, it's going to be a decent move. But you also know you're going to get plenty of them, and you don't need to be greedy. You need to just take your profit, right? That's all you got to do. Take your profit. Take your profit. Wait for the next move. Take your profit. You're always setting limit orders. You're never the taker. You're always the maker. Time to fly in here? No. Right? You're always barebacking that motherfucker. Right, guys? You're never taking it. You're always giving it. That's what's great about volatility trading. You will always be the maker of the trades, and that's what you want to be. I mean, there's certain exchanges out there, you set it up properly, and you have zero fees. If you stake 25 FTT tokens on FTX, do you realize you have zero trading fees if you're the maker? That's powerful. Especially, what's FTT at right now? How cheap is this thing? $40. $40. I mean, for around $1,000, you can stake 25 FTT tokens and get zero trading fees on FTX. Not financial advice, but yeah, if you're able to trade on the FTX platform that allows you to use leverage, margin trading, all this fun shit, by all means, it would behoove you to stake those tokens. And as an American citizen, I would never trade on a platform like that because it's against the law. Yes, yeah, exactly, Sayron. That's exactly what I do. Even though we come down here on the 15-minute, and you can see it, right? The 4 hours have been, so you can see it, boom. Every one of those, you can just see it. Was this a good move to the top side? Yeah, but you didn't know that was going to happen. And this probably right around here, this hit a good level to take profit if you were to look on the VRE. I would imagine so. Let's peek real quick. Yeah, where? Top side, 68.3, Laplace distribution range. Boom. If you don't take it at the bottom side. But I'm sure the volatility showed on like 5-minute, 7-minute charts, that volatility was probably hammering and it was showing you that was going to push through. So that would be a good level. But right here would have even been more ideal. Right at the center of the daily price action volatility range, and look at it reject. It went a little bit above it, allowed you to take your limit profit, boom, and then it pulled back, closed that candle right on the downside, then continued up. But look, if you play it like that 4 hour trend, You're using all your account to these downside moves, where there was only really one good upside move. Powerful. I mean, you had one here, but these three nice downside moves. Yep, exactly. And that was the thing, right? That's why we got this big rocket ship 4 hour, right? We had that bull div on the returns oscillator, and bam, popped right back up. Not only was it on the returns oscillator, it was on the log return Z-score. Hell, it was on Fisher. So you had literally bull div everywhere. That's where I would use like my whole account. And it's easy to say, you know, if you have 3 Bitcoins in an account, I would use 3 to trade with trend on those low time frames, and just 1, just like a third of my account. If I had 4 Bitcoins, I'd still only use 1. I'd use a quarter of my account. I just like to break the math down so it's easy, so I don't have to think. It's hard enough, right? You have to be so on top of your game when you're trading these low time frames, right? Not only you're looking for your good entries, you're bouncing in between the VRE. You're trying to find those areas where you're going to take your profit. And we all know this shit can happen in one 15-minute candle, so you got to be quick. You got to be real quick. Like I said, this is going to be a resistance area now on the daily going into the end of the day. If the bulls can push this back up into the 68.3, that'll give them a little relief going into, and that's what they're trying to do. Right? Got the battle of the algos. They're trying to push it up there. It's all about making that Skrilla. And tomorrow we'll go into these traditional markets a little more. And keep an eye on Bitcoin. If this thing starts dumping out, because like right now, this daily price action volatility range is going to drop, but it's going to widen. It's going to widen significantly. Probably by, because how tight was it? It was about $400 and some change, 440. This thing's probably going to go up to about $750, $800 range, I would imagine. And right now, the center is literally going to be around this area right here. So it's going to drop. If you see this bad boy start rejecting off the bottom side of that daily range, and it starts to dump overnight, you're probably going to see SPY have a really bad pre-market. Big time. Let's see what's happening in the 45-minute. Yeah, even the 45-minute had some bull div. That's why we're popping right now on this 45-minute candle. Bull div. Log return Z-score bouncing off the 95% confidence interval. Nope, the 90. Good enough. That's why don't be afraid to expand your indicators too to get a good look. Because you see, when you don't have it expanded, it looks like it's down there on that 95. You blow it up, and you're like, holy shit, that was deceiving looking. Right? Now it's barely past the 90. You close that down, it's like, oh shit, looks like it's tapping it. And another thing, right, which I've told everybody, when you see that entropy start to pull back into randomness and it's losing its correlation to whatever direction it was going, you're going to see that price action reverse. Contracting volatility, negatively correlated, significant. If this continues to contract, I mean, Bitcoin might pop out of this little hole. There is that daily bull div. Right? There is the daily bull div building. We're talking all through last week. It's building. It's been building. The Fisher's still going down. They're both at about the second standard deviation band. But yeah, I don't like seeing that on the daily, the Shannon entropy percentile and just the regular entropy. Actually, that Z-score is heading down, significantly positively correlated. Bulls are really going to have to bring in some buy pressure. Let me see here. I mean, you can see how that sell pressure on the 4 hour. All right, we were all loving this, right? It was building. Sell pressure was decreasing. End of the week, in the weekend, man, this thing just freaking sell pressure just came on. Buy pressure right now on the 4 hours decreasing. Sell pressure increasing. We'll have to see what happens here at the close because this thing is trying to pump out of the hole. Yeah, we're all excited. All that sell pressure was waning, right? Had the buy pressure. Even started, boom, got a nice pop here. Where it was really tapering off. That's what I liked. It was tapering. But now, buy pressure is decreasing. Sell pressure is increasing. We don't want to go through this again. I'm talking to all you You high time frame traders or holders that care about really what Bitcoin's doing. When you trade low time volatility, you can care. But I always try to give a little something for those people. At the same time saying, you're crazy. Get out of quit trading those time frames. Get down where all the meat of the meal is, man. In and out, low time frames, taking profit. Win, 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 win. You study this hard, and you do your due diligence and dedicate time to your craft. Your P&L will just impress you, and that's the only thing that matters. I don't give a shit about impressing anybody else. I want to impress myself and be like, yep, I'm reading this shit correctly. This is powerful. You set up a good trading edge. People in traditional TA, they can fucking talk about having an edge all day long. It's a crock of shit. There is no edge to be had using lagging indicators. They can argue all they want. YouTube Jimmy can come and argue with me all he wants. There's no argument. How the hell are you going to set up an edge? You have no idea what's going on in the markets. It's a fruitless endeavor, man. YouTube Jimmy, come on over to Alpha Trading. We can have a discussion. You can trade however you want. But if you want to figure some things out, come over. Ask us some questions. We'll show you. We'll show you some indicators. We'll teach you about the divergence between price action and returns. The only div that matters. The only divergence that matters. It gives a look into what the algos are doing. When the algos are getting ready to flip the switch. Right? Turn the buy program on. Turn the sell program on. That's what that divergence is telling you. I have seen so many divergent scenarios in traditional TA play out where it just wrecks everybody. Oh God, there was bull div and the thing just, those indicators can freaking stay buried, right? The return oscillator doesn't. Does anybody ever notice that? Look at the fucking return oscillator. Do you ever see this thing swimming around up in some so-called overbought or oversold zone? No, we have standard deviation bands around ours to give you an idea of where it's at. This thing, it's like a fucking heart monitor, man. Boop, 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 boop. Just popping off divs. Telling you what is happening. So that's where we're at with all that. That's going to wrap it up for today anyway. We got 3 crazy dogs wanting to go out. So if you're watching this on YouTube for the first time, we're Alpha Trading and we trade volatility, probability, and statistics. We love to teach people to do the same. The link to our Discord is in all of our videos. Open up a support ticket. Tell us what's on your mind. Take a look in the shop channel. 2 different levels to our Discord. And other than that, thanks guys for watching live in the Discord. And wherever you live at on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, and evening. We'll see you tomorrow, 2 p.m. Pacific Standard Time. We'll give you a look into what traditional markets are up to as well. See you guys.